Ladies and gentlemen, welcome back to the Forex Viewers YouTube channel. First of all, I want to thank you all for liking and subscribing, watching the videos. It means a lot. If this is your first time watching a video, please take the time to subscribe, like and share. Do all those things. And of course, leave a comment. Tell us what you think. So this week, the market has been good. Oh yes, mother market has rewarded us with all our patience, and we've had a good week. All in all, so now it's Thursday. It's 10th of March, 2016. Just gonna calculate here a little bit. All in all, we're up. For this week, we are up 499 pips with the close of the bat pattern here on the 618, which actually happened last night in the middle of the night, and I had my speakers on, so the ninja lady woke me up screaming, "Order failed." So that was okay, waking up to that. But like I said, we've had a great week. 499 pips. Let's sum it up to 500. We have 500 pips this week. We have 9 trades in total. We have 7 winners and 2 losing trades. Right? So that's 500 pips, guys. 7 winners, 2 losers. 9 trades in total. So you don't have to trade all day from open to close to get your pips in the bank, right? So that's the first lesson. I have basically posted every trade we took this week on TradingView. So guys, if you're not on TradingView, follow us on TradingView, Forex Viewers. All right, so another thing, because people have been subscribing to the channel, and I'm loving it. I am going to leave below this video. I'm going to leave a huge discount to our trading course, which is a trading course from beginner to pro. If you're a beginner, you can take it. You don't have to have any experience. We go through all basically everything I know. So you're gonna be just as good as me. I'm just kidding. But nevertheless, it's an 18-hour video content course. There are 12 lectures, I think. I don't really remember, but 12 lectures, about 100 pages. We have 18 hours of video. We have the backtesting sheet included. We have the money management sheet and the money management training included. So guys, if you are new to trading, if you are interested in becoming a trader, take the course. I'm gonna leave it at $50. First, when I was learning, take note of this, guys. When I was learning, I learned from Trade Empowered. I bought my training for $1,500, right? So you're gonna get the training for $50. So it's really important that you take advantage of this deal before we get huge. And make no mistake, I will create a huge education company, right? So this is something I am prepared to sacrifice just to get the word out there. I'm gonna sell the course for dollars and pennies until we get huge. So, like I said, take advantage. So the market today is basically doing nothing, right? I haven't gotten any opportunity of trading today. So we have this currently from, I don't know, whenever. It's just sideways, nothing really happening. So here we had a Gartley pattern and a bad pattern, and I didn't actually get involved in this, the Gartley, but if I have, I would have gained about 200 pips more. But that's okay. I was waiting for the bad pattern to complete inside the zone. It didn't, so that's fine. We got a win on the euro, got a win on the dollar yen, got a win on the New Zealand dollar. We got a win on the yeah, that's about it. So basically, what I did, I just managed my positions throughout the day yesterday and the day before. Yeah, that's about it. But I did actually get a request from someone about hedging. I talked about hedging in the last video. I explained it a little bit. I got a request to explain it a little more, a little better, a little more detail. So that's what I'm gonna do this week. Like I said, the market, there's nothing basically happening. So I haven't been trading today. Most likely won't be trading today. Let's check out the news for tomorrow. So we have let's refresh this. We have the minimum bid rate on the euro in 5 minutes. So, or is it out? No, it's not out. And we have more news on the euro and the USD. So, gonna be standing clear of that. Tomorrow is on the CAD. We have the employment change and the unemployment rate. So we'll be taking a look at on the dollar CAD if we have an opportunity there. On the news, where was I? Where was I? On the euro. On the pound. Because I spotted a opportunity. On which pair was I? Was on the Aussie CAD? Nope. The Aussie dollar. Anyways, for you guys that are trading the advanced or improved patterns, this is of course a long way to go, but this may end up being a Gartley pattern forming here. If we get a small push to the upside, touch that 618. But let's not get into that. It's quite a long way to go. But if we get a Gartley pattern here, we would get a long position in my structure area. So I will be taking a look at that. But anyway, the hedging. Let me just find a chart that is not so clustered. And the euro dollar, what's happening? As you can see, the news of the minimum bid rate came out, and this is what happens. So the forecast was 0.05. The actual was 0.00, so less than expected, and you can see how the market is reacting to that. Right, so this is quite a jump. Where were we here? It's about 80 pip. It's about an 80 pip jump to the downside. So here you have why, and we continue lower. Whoa. Here you have the reason why we try to stand clear of the news. But of course, if you're on a short position on the euro, you are benefiting right about now. But anyways, let's continue. Let's talk a little bit about hedging. So basically what hedging is, like I've explained in the previous video, it's something. Let's take the current situation. Let's take an example here. You can use this. Okay, so if you were to hedge the news right now, let's just take an example. You would buy and sell at the same time, right? So I buy right here. Let's make this green. And I sell at the same time, right? This would be a sell. So let's make that red. Right, so I'm hedging in other, basically what hedging mean is buying and selling at the same time, right? So buy, sell right here. So I'm exploiting what actually may happen on this big news candle, right? So we have to have stops. So basically what you do is you would place a stop for the buy right here. Let's make that different green, right? So this is my stop for the green, and I need to place a stop for the sell as well. Of course, this is not accurate. These are not accurate measurements, right? So I place a stop on the sell right here. So this is basically what happens. I buy and sell at the same time, right? The news come. My candle breaks through, we get stopped out right here. And what this does is basically it guarantees, and guys, I'm saying guarantee with, I'm not recommending anyone doing this, right? So you have to be quite good at this, you have to practice and stuff like that. And of course, this doesn't even work in the United States. But the news come, you break down, you get stopped out, and of course, you lose a little money on the way, right here, but you gain more than you lose, right? So we minimize our risk by either way the market goes, up or down. If let's say the news were good, the same thing would happen. The candle would go up. We would get stopped out from our sell. We would lose the money on the way. But when we get stopped out, we would start gaining, right? I hope I'm explaining this the way it should be explained, right? So we can take, let's say that the stop is 30 pips away, right? So our sell positions is gaining 30 pips while our buy position is losing 30 pips, right? Does that make sense? So we get 30. Nope. Wasn't going to remove it. So we get 30 pips of gain from the sell, but we get minus 30 from our buy position. So essentially we are break even, right? It's not until we get stopped out, we're minus 30 plus, and then we start gaining on top of our 30 pips from the sell position, right? And that's the remaining candle, right? So that's basically how hedging works. I hope I am making this so you guys understand it. The reason, like I've said before, the reason I don't hedge and I don't recommend hedging is that the market could break down, come to a stop right here, and then shoot back up. It would hit our buy stop, it would hit our sell stop, and you end up losing more than you're gaining. So this is basically, it can be a minimizer for risk, but you would have to do it. You would have to practice. You would have to back test, see in what scenarios you can hedge and what scenarios you can't. Right? Hedging is fine when you're at these breaker points. Right? Let's say you're at a major structure level, right? And the market either is going to push through the structure level, come back down, something like this, and then continue, right? Or the structure is going to hold and then reverse, right? So you basically have to play for a little more to gain than you are prepared to lose, right? So that's one of the scenarios. If you're going to hedge, I would recommend you doing so at these breaker points or at these important structure points, right? Because doing so, I know this looks pretty good right now on the news because we've broken everything that has to be broken right here and gained hundreds. What is this? It's like 90 pips or something in a minute. But your broker actually may not stop you out right here. You might get slipped. You might get filled right here, and then you're just gaining a few pips. So I'm not recommending you hatch the news or do some kind of breakout strategy trading the news, because your broker is not going to be filling you at the exact price you want to be filled, right? So because this happens so fast, as you could see, the candle just went straight through, and there are so many selling orders right here. You won't probably get filled right here. You're going to be filled somewhere around here or whatever, right? So you can try it out, but be prepared to lose a few bucks if you're experimenting. And guys, do this on a demo. This is an excellent thing to do on a demo account, even though you're trading live. Just make up a free demo account somewhere and just test it out. If you want to trade the breakouts, some news or something like that, just get a demo account and test it out. It's pretty easy to do that, and the demo is excellent for testing things out, right? So make sure you do that. The second thing I want to show you guys is, for you guys that are in the United States, is this site right here. This is the Oanda site. So you can just type in oanda.com. And this is a currency correlation, what do you call it, heat map, or yeah, it's a column. And this tells you, and this gets, I think, updated. You can see that last update on March 10th at 12. So it's 12:58 right now, so it's pretty accurate. But here you can see the correlations between pairs, right? I've talked about this before. So if you want to hedge, let's say the Euro USD, you are going to need to find a pair. So let's find the Euro USD, click on that, find a pair which is, let's take the dollar CHF, which has strong high negative correlation, right? So let's check it out. We have the Euro USD, the USD CHF. So Euro USD, let's check out the USD CHF, and I'm guessing that the market has done the opposite of this candle right here. And what do you know, right? So this is correlation between pairs. So if you can hedge on the same pair, you can hedge using this method, right? Same thing if you find a fantastic opportunity on a chart, you could use this to find pairs that correlate, right? So let's say the Aussie USD, the Aussie yen, very strong positive correlation, right? Same thing, let's check out the Aussie USD. Take a look at the map, the chart, right? You can see this upwards movement, right? What was it was the Aussie yen. Let's check out Aussie. Let's just find it, Aussie JPY, right? Same thing. Now we're expecting the chart to be pretty similar to this chart. Let's check it out, right? Can you see it? It's pretty similar to the Aussie USD, right? We have this strong up movement. So that's the thing about correlation and hedging. Like I said, I don't recommend it. You can test it out on a demo if you're interested in this hedging thing. I am not an expert. I do not hedge. I don't hedge the same, and I don't hedge or use the correlation, this correlation map, this currency correlation map. I'm just making it available to you. You guys make your own decisions. Don't come screaming at me if things don't work out. But of course, I implore you to check out a demo account and test things out if you're interested in that, right? So, not a lot of things to sum up, not a lot of things happening in the markets today. Maybe tomorrow, but tomorrow we have on the CAT, the unemployment change and the employment change and the unemployment rate. So make sure you check that out and watch out for these news, because there's nothing worse than having a great situation and then being on the wrong side of this, right? It's great when you're on the right side, but it's pretty annoying when you're on the wrong side, right? So make sure you watch out for that. Like I've said in the beginning, I will be giving below this video a link to the course. It's 50 bucks. If you're interested in trading in general, I implore you to use this opportunity to get this course on this fantastic price. I'm not going to be selling it anymore, but this is for you to decide. So yeah, I think that's it for today, and I'll see you in the next one.